Good morning. It's a Tuesday morning, about 11 a.m., and wanted to just say hello to everybody and give you a little more details in the process of a reverse mortgage. We've already talked about preparing before an appraiser comes, making sure there aren't any blatant issues which we picked up by an appraiser, specifically health and safety issues, peeling paint, any railings missing, or steps that need repairs or things like that, or if there's a ceiling in the interior of the house that needs some work done because there was some previous water stains, to make sure all that's done before an appraiser comes. So we've already gone through that. We've also gone through the steps you can take once you have the appraisal in hand and have its value as to what your various alternatives are. Check back some of our other video blogs regarding those issues and explanations as what you can do. Today, I wanted to go a little further on the next step, which may or may not be an issue for people, but if it is, it can be a major issue, and I'd rather address it up front and explain what the various alternatives are. And that is that typically we're not looking at assets during the review for a reverse mortgage. We're also not looking for income. But there are exceptions. The exceptions are going to be, and let's talk about the income side and then let's talk about the asset side. The income side is basically if you have a property and you are not going to be selling that property, but let's say you have a house or a multifamily house and you're going to keep it, but you're going to move into another a condo or another piece of property, in which case the underwriters have the requirements that they may want to make sure that you can meet all the obligations on all the properties. So if there's a mortgage on your current property which you're not paying off and you're just buying another property, or there are condo fees, there are real estate taxes, insurance, they're going to look at tax returns to be able to ascertain you have adequate resources to meet any of that requirements. If you are just going to refinance an existing property, or you don't have a mortgage and is taking out a mortgage on your primary property, then typically they're not looking for that extra income information. But where there are multiple properties, usually income properties, and you're not selling your current property, but you're going to then rent it and keep it as an income property, then you be aware that they may want multiple years worth of income tax returns, in which case they want every page, all schedules complete. They also going to look at where the income is coming from and may want supporting documentation, be it withdrawals from 401ks, IRAs, or other pension funds. So be prepared to have a package which has all the supporting documents of all the income sources as well as the tax returns. If it's from investments, then the full statements from your investment account, and you'd want to show at least 3 months worth of those statements. So you basically want to have a full trail. Again, it's where's the money coming from, where's it going. So that would be important. I have a lot of times, the more assets you have, the more complication this whole process unfortunately gets to be. So right up front, you want to have that information. So again, we're tracking income, we're tracking expenses, and showing, and expenses showing what are the condo fees, so a copy of a condo fee bill, real estate tax bills, homeowner insurance bills, etc. Should have those available. If there's a mortgage, the mortgage bills. So we want to basically track income property, what you're receiving, what you're paying out. So even if you're doing just a traditional mortgage, but somehow there is income property, be prepared to have that information available. The more you can have it up front, the less issues down the line. So that's how that basically works. And again, ask us for any more information on that, and our number, you can reach us in the office anytime, is 781-202-7475, extension 700. And again, my name is Bob Gersh. And so that's the income issue. The other issue is assets. If you're going to do a refinancing and the amount of your mortgage compared to what we can get in the refinancing is such that we're short money, you need to bring money to closing, then we have the issue of tracking those funds. It's called sourcing. And the same issue is if you're buying a new property and using reverse mortgage for purchase, and then whatever your down payment is, we're going to source that. So, which case, any checks you paid to a realtor, if you're buying a property as a deposit, we need copies of those checks. We also need bank statements going back 3 months. Any deposit which is $1,000 or more, be prepared to have documentation of the source of those funds. So sometimes one thing leads to another where you're transferring money between multiple accounts. Be prepared to be able to track all of it back. Now, if you're doing the loan and it's going to be a couple of months before you close, be prepared to update us with current statements as you get it. Every statement, if there are large deposits or transactions on it, we're going to want the documentation. That way we have everything we need. It's not a problem, it's just a matter of tracking and see what the source is. What we're looking for and the underwriter's looking for is to make sure you're not borrowing funds to utilize to have the additional down payment. Usually it needs to be your own funds to qualify for the reverse mortgage. So again, it's tracking funds is the key. Documentation, documentation, documentation. So have the paperwork, tracking any deposit on any bank statement, and any bank statement that leads to another bank statement, having all those statements. And if it's more than a month before you're closing, be prepared to provide the most recent one so we have updated information, because the underwriter will probably ask for it. So that's how it works as far as income and assets. And to be prepared right up front is great because it avoids questions, it avoids aggravation, and to say, well, I didn't know I'm going to need that. If income, investments are involved, and we're trying to document that you have the funds to pay the various condo fees, association fees, real estate tax, insurance on properties, you may want to at least have that documentation and the sources, and if it's from an investments, you'll probably want a couple years at least of tax returns, and you'll want other backup information from the sources of that. So income, as well as bank accounts, transfers between accounts, you want to have all the cash flow, and any other large deposits, which means $1,000 or more, you'd want to have documentation. So that's how it basically works. So that's something to be aware of right up front, so that you can basically have a nice file ready for us when we take the application, basically, and then we don't have to be able to go back and piecemeal ask for things, because that can happen. Underwriters have the right to basically keep a file open until almost ready for closing. So the more complicated the situation is, the more potential documentation, the more we can provide up front, then the less there is to deal with going forward. So that's the story today, and have a good day, and hopefully I'll be speaking to you later this week.